Recording. All right. So within the previous lecture, if I try to recap you what we did within the previous lecture, we have studied the normal kind of audit report that there is, which all the auditors use all around the world. Whenever they want to make the audit report, this is what they follow. The pattern that we just studied, this is the pattern that is followed by all the auditors. This is the normal thing that is followed by every single auditor all around the world. Whether you go to USA, whether you go to Canada, whether UK, Africa, Pakistan, India, Dubai, UAE, anywhere in the world, the Middle East, every single place in the world, there is one thing common between the audits that are done by different organizations, by different audit firms, is the audit report itself. It is the same all over the world. But there is another audit report that is quite similar to this audit report, but there are some changes made to it. Specifically, remember these things. Can you hear me?
Yeah.
Okay, remember these 3 points. Number one, don't ask, sir, what is this? Because I will explain this in one moment. Just remember these points. The Murgha paragraph, M-U-R-G-H-A. The Murgha paragraph. The second paragraph is EOM, the emphasis of
What's
middle
that?
paragraph. Don't write it down. It is written. We will explain it later on. And the third
Okay.
one, OM paragraph, which is known as other matter paragraph. Whenever these three paragraphs or any one of these paragraphs is added to the normal report, it is not anymore known as a normal audit report or what is the normal audit report? It is an unmodified audit report. Whenever any of these paragraphs are included within the normal audit report, whenever they are added, any one of these or all of these or any two of these, any one is added, the audit report is known as modified audit report. Modified audit report. Got it? Do
Okay.
you understand this?
Yeah, I see if any one of these is added is modified, even though I don't know what
So,
those are,
so,
but
so
yes.
remember this. So remember this for your practical life as well. Whenever someone is telling from now onwards that we are giving an unmodified audit report, this means that any of these three paragraphs are not added to the audit report. But whenever someone is saying to you that we are making a modified audit report, this means simply that any one of these or all of these or any two of these have been added to the audit report. Understood?
Yeah.
So there the one report is a normal auditor's report, which is known as an unmodified audit report, and the other one is a modified audit report in which any
Modified. Okay.
paragraphs are added, or any one of these, or any three of these, or any two of these, even one is added, it is known as a modified audit report. So what are these three paragraphs? The first thing you need to remember is the pattern of where are they included. Obviously, I told you within the previous lecture as well that there is a pattern you need to follow when you talk about an auditor's report. You can't write something first based upon your own understanding, something second. No, the pattern has to be followed. Like first come the titles, then the addressee, then the auditor's opinion, then the basis for opinion, then CAM, then further other information, and blah 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 blah. You have to follow this pattern. You cannot leave this pattern. So whenever any of these paragraphs are being added to the audit report, obviously this would mean that it is a modified report now. The question is, where are these paragraphs added? Like according to the pattern, where do we add them? The Murgha paragraph directly comes after the basis for opinion paragraph. Remember that. The Murgha paragraph is always added right after the basis for opinion paragraph. Understood?
Yes.
The second paragraph, EOM, emphasis of matter paragraph, it is added right after the Murgha paragraph. Or in other words, before the CAM. Got it?
Yep.
So let's suppose I say that in our modified audit report, we did not add a Murgha paragraph. We only added an EOM paragraph, emphasis of matter paragraph. We only added that. Where would that be included? Obviously, now we are going to skip the Murgha paragraph. Rather, right after basis for opinion, emphasis of matter paragraph would be included. Understood?
Yep.
Great. The third one, the other matter paragraph, it is included right after the report on other legal and regulatory requirements. Before the signature, it is included. So basically, the last paragraph in a modified audit report might be the other matter paragraph. Got it?
Okay.
Because signature is not a paragraph. Auditor's address is not a paragraph. It is just an address, and the date is again not a paragraph. So the final paragraph in a modified audit report might be the other matter paragraph, right after report on other legal and regulatory requirements. So basically, all the remaining pattern, all the remaining things are same. Nothing has changed. The only change is in a modified audit report, whenever these paragraphs are added, the first thing to remember is it is known as a modified auditor's report. It is not anymore known as an unmodified auditor's report. This is the basic thing that you need to have within your mind. It is known as a modified auditor's report. Now, if you are adding the Murgha paragraph, it is included right after basis for opinion. If there is EOM paragraph, emphasis of matter paragraph, it is included right after Murgha and before CAM. If there is an other matter paragraph, this is the final paragraph that is within the modified auditor's report. Understood? Any questions up till now? Because now we are moving towards this explanation. What is meant by this?
Nope. Nope.
Great. Now let's move towards Murgha paragraph. First, I will move towards the notes. I'll move towards the notes first of all. What is a Murgha paragraph? Obviously, it is written here, but some things that are written here, these are just theoretical things that you need to read. We need to have an in-depth understanding of what actually is a Murgha paragraph. Now, Murgha, what is meant by the word Murgha? By the way, where does this mnemonic come from? All the Hindi and Urdu students who were my students found it very funny that I used to call it Murgha paragraph. There is another teacher in the world who is known, is a very well-known teacher, someone who taught me triple A and double A at the same time. His name is Ahmad Mumtaz. He told me an easier way to remember this paragraph's name is Murgha. What is meant by Murgha? Murgha, by the way, is known as chicken or hen in Urdu language. So I used to call it Murgha. Even my teacher used to call it Murgha so that we can remember it clearly. Now, what is meant by Murgha? Murgha stands for material uncertainty relating to going concern. Material uncertainty relating to, it is written within the notes. So if you want to write it down, you can, but I would not suggest it. Relating to going concern. So do you remember within review and completion, you studied about going concern. There were two probabilities. Either the company it was sure that the company will not be able to continue in the foreseeable future. This means that you had to make up the financial statements on breakup basis. And there was second condition. The second condition was you are unsure of it. The company might not be able to continue in the foreseeable future. If things don't play out right, the company might not be able to do so. You were unsure of it. In that case, it was the requirement and it was a disclosure requirement for the management of a company that they had to provide a disclosure within the financial statements explaining every single thing that why we think we might not be able to continue as a going concern company, right?
Yes.
Now remember this very one thing that is very important for the exam and do not get confused within it. Whenever there is a material Can you hear me?
Yeah, I can hear you now.
Okay, okay. Now remember this one simple thing and keep it on your fingertips as long as you can for the rest of your life if you want to become an auditor. Remember this one very important thing. Number one thing to remember is that whenever there is a material uncertainty, whenever there is a material uncertainty in regarding to the going concern, number two thing, the management has properly disclosed it. The disclosure, you have checked the disclosure and the management has given the disclosure and also the disclosure is proper. Nothing is missing out of the explanation within the disclosure. This is the number two thing. Then comes the number three thing. Whenever the disclosure is proper within the audit report, the auditor will include the Murgha paragraph, and within this Murgha paragraph, he will himself write down that we have checked. We think that the company might not be able to continue in the foreseeable future. This is why we are including this paragraph and emphasizing this matter that you should read this proper explanation given by the management in the disclosure notes. So basically,
wait.
in this paragraph, the auditor is emphasizing to the users of the audit report, whoever is reading the audit report, the auditor is including this paragraph and trying to emphasize the correct disclosure given by the management that please go and read that disclosure. Got it?
Okay.
Any questions?
Yeah.
Yes. What is the question?
I don't have any questions.
Your question might be, sir, what if the disclosure is not properly given? Should we
but I know you're gonna say we're gonna get
paragraph? No. Forget about the fact right now. What if the disclosure is not properly given? We will discuss it later on. Leave it as it is. But the question that you should ask me right now, sir, Do we add a Murga paragraph? Do we add a material uncertainty relating to going concern paragraph, even if the management has not properly disclosed it, or even the management has not even given a disclosure? Do we still add a Murga paragraph? No. Murga paragraph is only added when the disclosure is properly given, and as an auditor, you can you hear me?
Yes.
Can you see the screen?
Wait, I'm trying. No, yeah, yeah, now I can see.
Okay, great. Now, what was I saying? I was saying that Murga paragraph is
You
only
asked another
added.
question.
Yes, but wait a second.
What is actually? I don't know the question you asked because it's very
Yes,
cut off.
yes. Go
You
ahead,
said
ask
this
the
is the
question.
question you should have. No, no, you said this is the question you should have asked, and then it cut
Okay,
off. So
I'm
I
going to
don't know.
repeat it. I'm going to repeat it. The question I want you to ask me is that, sir, what if the management has not given a proper disclosure, or the management has not given a disclosure at all? There is no disclosure, or the disclosure is not proper. What do we do then? Do we still add a Murga paragraph? No. Remember this condition. Murga paragraph is only added within the audit report. Murga paragraph is only added to emphasize the disclosure that is properly given by the management. So if the disclosure is not proper or it is not given, Murga paragraphs will not be added. Got it?
Wait, 1 second. No, no, 1 second. So if the management does not disclose, so what if and if they don't disclose, right?
Yes.
It will not be added.
No. Murga paragraph will not be added to the audit report then. Murga paragraph can only be added if the disclosure is proper, and the auditor will give the heading Murga. This means that material uncertainty relating to going concern. And in this paragraph, he will further explain, we are adding this paragraph. You don't need to learn what he will write down, but basically he will explain that you should go and read this disclosure because it is properly given by the manager. The auditor is just
Mhm.
trying to tell to the users that please read this. The company is facing material uncertainty. You should go and read this disclosure because this is really important for you. Got it?
Okay.
Any questions now?
No.
So now if I come back to the notes, it is written, this section is included when there is a material uncertainty relating to going concern status, which the directors have adequately disclosed in the financial statements. The auditor uses this section to draw attention to the users to the client's disclosure notes. That's it. Got it?
Yes.
Now let's come towards the second paragraph. That was known as EOM paragraph, emphasis of matter paragraph. What is emphasis of matter paragraph? That is another very big question, a big question mark. So now remember this as well. Whenever there is an issue with the financial statements or an important figure, whatever, but the condition it must be related with the financial statements and it has been properly disclosed. Must be related with, sorry, apologies, let me rewrite it. Must be related with financial statements and is properly recorded by the company as well. There is no mistake in it. Properly recorded by management. Recorded by management or disclosed. Then and then only an EOM paragraph will be included. So imagine this. Imagine this. You went to audit a company and you found out that in this year, the company has gotten 100% increase in revenue. As an auditor, you start the story by imagining that there is an audit risk by applying analytical procedures. So you identify this audit risk and then you further go towards substantive procedures and you apply all the substantive procedures and you find out this revenue that is 100% increasing, it is correct. We have found no error in this. But still, this is very important to the users. The users must know that the revenue is increasing by 100%, right?
Yes.
Yes or no?
Yes.
Yes. So, as an auditor, again, you will add an EOM paragraph. This means an emphasis of matter paragraph, and you
But
will
then
just, yes.
wouldn't it already be on the wait on the key, like what's it called?
Oh, a very good question. A very, very good question. But let me
A
explain
key
something
matter.
very, very better to you, something that you should know. Within key audit matters, the auditor's perspective was something else. There he used to disclose the areas where he faced difficulties during the audit. In EOM paragraph and within key audit matters as well, he also gives all the procedures he performed. So in when we talk about the CAM paragraph, the perspective of the auditor is that he has to tell the users of the auditor's report that these are the areas where we faced a lot of difficulties, and we performed these procedures against it. This was the perspective, this was the thinking of the auditor. But when an auditor is thinking about an EOM paragraph, there might be something very important within the financial statements that the user should know about. The perspective has completely changed. When we talk about CAM, we are talking about where did we face the difficulties. When we talk about EOM, we talk about the fact that which are the areas properly recorded or properly disclosed within the financial statements other than material uncertainty relating to going concern, because for that there is a separate paragraph. But
So
any other type of disclosure or any other type of balance which is important for the user, the auditor simply writes down the fact that we have audited this, but please go check yourself. These balances or these other disclosures are very important and you should read them. For example, you should know that there is a disclosure note requirement of IS 16 where you have to provide the breakup of the total balance of PPE. For example, the company is recording within its financial position the total PPE balance of 1.3 million, let's suppose. Now, there is a disclosure requirement of IS 16, and IS 16 states that the breakup according to every single asset. We have this asset, the total value is right now 100. We have this asset, the total value is 200. Up till and until the total balance is 1.3 million, they have to provide this breakup within the disclosure notes. So if the auditor thinks that this disclosure is very important for the user and it is properly again recorded or disclosed, again the auditor will include an EOM paragraph, but in this paragraph he will state this is very important for you, you should go and read this disclosure or check this balance. Got it?
okay.
So my question right now from you as a student, if there is a material uncertainty relating to going concern, can we add that within EOM paragraph?
No.
No, because for that there is a separate paragraph known as Murgha. You are correct. Your answer is correct. If there is a disclosure relating to, let's say, fraud that has happened during the year, can we include a Murgha paragraph for it, or should we include an EOM paragraph for it?
EOM.
Yes. Remember this basic thing.
Unless if you like the fraud, like I mean that's something else. But if the fraud has a big impact on materiality, then
It
maybe.
does not have any kind of breakup. It does not have anything, but this disclosure, obviously, remember this, if there is a significant thing that has happened in the company during the year, it is a requirement of the financial statements accounting standards that you have to disclose it. So now this disclosure is very important for the users. They should read this, right? So you will emphasize this disclosure within the EOM paragraph.
Okay.
Okay. So remember this very important thing. Anything, any uncertainty which has been properly disclosed relating to going concern, we can only include a Murgha paragraph for it. But any other thing within the financial statement, the proper word is any other thing within the financial statements that is properly disclosed or recorded. If an auditor wants to emphasize that, the auditor will include a EOM paragraph. So if I ask you this question right now, if a disclosure again is not properly given and you want to emphasize it, should you add an EOM paragraph?
If a disclosure is not proper, wait, give me a second. If a wait, wait. No. But I have
No.
something to say.
No, 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 no. You can't.
I have something to say though.
Yes.
I have something to say. I have something to say. Like the EOM and the CAM, is it like for only stuff that require disclosure? Because I feel like all the examples are on disclosure.
Sorry, sorry,
Like
sorry.
what I mean is it like is it only for stuff that require disclosure notes and stuff? Because both the examples are on um things that you should put on disclosure notes.
Yes, yes. The thing is, Omi, that obviously for the users themselves, what are you going to tell them that look at the revenue, it has increased by 100%? You can't tell the management that. Just look at you can't tell the users that. Look at the profit and loss and look at the previous year's revenue and current year's revenue. You will find that it has increased significantly. You can't write that down within EOM. You can't write that down within CAM as well. Obviously, for revenue itself, there is a separate disclosure which
Yeah.
provides a breakup of
Exhausted
revenue.
them.
I have shown you that within the financial statements. So you
Mm-hmm.
will refer the users to this disclosure that has been properly given so that they can study it in detail themselves.
Like investors, are they like very knowledgeable on financial statements or something?
Come again, sorry, come again.
Are investors very knowledgeable on financial statements?
Are
Like, are they
so
like knowledgeable? Are investors very knowledgeable on financial statements?
are ledgers?
You know
Sorry,
what I mean?
the
No,
word
no,
you are
no.
using here, I
I
don't
said,
understand that.
sorry, I said, are investors, like investors,
Okay.
are they very knowledgeable? Like, do they have a lot of knowledge on financial statements?
In F7 and even in F3, even in FA2, you studied a concept regarding information. And the information basically you studied must be accurate, right? This was the mnemonic used for accurate.
Mm-hmm.
And within one of these mnemonics, I don't remember it completely. Apologies for that because I'm not a teacher of these subjects, so I don't completely remember it. But within one of these, it was assumed that the investors will have the knowledge to study it. So it is not your responsibility to assume whether the investor is knowledgeable or not. It is his responsibility to educate himself properly so that he can understand the financial statements.
Yep.
Okay. It is not your responsibility to
Okay.
just worry about one or two investors. It is their responsibility to make sure that their knowledge is up to par. Okay.
Yeah.
Any questions up till now regarding EOM?
Um. Okay. Wait. EOM is when the auditor writes like on the when the auditor writes to refer the users of the financial statement on important matters they identified during the audit. That is EOM.
Another thing you should
Am I
add
correct?
here is that it must relate to the financial statements. It must relate to the financial statements, properly disclosed or properly recorded. Only then the auditor can add EOM paragraph. But the important thing here to remember is it must relate to the financial statements.
Okay.
Got it?
Yeah.
Great. Now let's go towards the notes and read it out. Here I have completely written an emphasis of matter paragraph is used to refer to a matter that has been appropriately presented or disclosed in the financial statements by the directors. The auditor's judgment in that these matters are of such fundamental importance to the user's understanding of the financial statements that the auditor should emphasize the disclosure or the presentation, anything, by including an EOM paragraph. Now, here I have given some examples which you should read, which you should know. Let me talk about some of the examples. An uncertainty relating to future outcome of exceptional litigation or regulatory action. So basically, this means that the government has taken some kind of an action on you, and obviously you would have recorded a provision or a future liability under IS 37, a provision you are not yet confirmed about the amount, but it is sure that you will have to pay it. Penalty, some sort of. Now, obviously, there would be a disclosure against this penalty. And this is a very important matter that the user should know. So you would include this if it is properly disclosed. And number two thing, it is related to the financial statements and it is properly disclosed. Now you are going to include an EOM paragraph for it. Understood?
Wait. Um, what do you mean by early application
Come again,
for
sorry.
new stuff? What do you mean by the third one?
Third one, early application of a
Yeah.
new accounting standard. So you should basically know this, and this is a very important, not very important thing, but this is a conceptually important thing. You should have this concept in your mind. Every single year, the accounting standards are updated. There are changes made to IS 37. There are changes made to IFRS 9, IFRS 15, IS 16. Many different accounting standards are changed and updated. So basically, when an accounting standard, let's say when IFRS 16 was implemented, or when IFRS 16 leases, basically, when you know what leases is, you have calculated it within F7 as well. You know the
I
basic
don't know it.
understanding how to calculate a lease. So when IFRS 16 was implemented, you are studying this right now as a student. But you should know this fact that this is a very, very recent and very latest standard that has been introduced in the accounting world. And
Where?
still to this date, many of the companies are not using it because when this standard was introduced, the IAS committee, basically the committee that makes the accounting standard, it said that all the companies should implement this new accounting standard on, let's say, XYZ 31st of December 2024. Okay, this is the date that all the companies must start to use it. So if any company is right now using it to make this their lease calculation and to properly record leases according to IFRS 16, the lease calculations, they will have to disclose that although it was not a requirement of the IS board, still we are using this standard to calculate something, and a proper disclosure will be given against it, which again, if a proper disclosure is given, the auditor will use the EUM paragraph to emphasize this. Got it?
Okay.
Got it? Any questions?
No.
Great. Now read this last paragraph, please. Emphasis of matter can be included or before the key audit matter paragraph. Leave this line. I have added this because this is a very old line. You can ignore this. Just remember, emphasis of matter paragraph is included before cap. Understood? Now, the second important thing that you must remember, this last line that I've included here. Let's say you want to include an emphasis of matter paragraph within your audit report, right? And you want to talk about a disclosure note relating to subsequent events. You know, there are such subsequent events, if they are not required to be adjusted, they are basically non-adjustable subsequent events, but they are material. The company has to provide a disclosure against it. You remember this, right? Within completion and review, we studied this.
Wait, let me read it again. Yeah.
If a subsequent event does not need to be adjusted, but it is material, a disclosure must be given against it. You remember this?
Oh, yeah. Okay, I didn't say about
so
that.
if a disclosure must be given against it, then you will include an EUM paragraph. In that EUM paragraph, you will emphasize that disclosure. The users must read it for that subsequent event. Whenever you are including an emphasis of matter paragraph, it is included as such, emphasis of matter paragraph dash. What are you talking about in this emphasis of matter paragraph? Subsequent events. So as a heading within your audit report, you will include the heading as well. Like within this emphasis of matter paragraph, what are we actually talking about?
So it's like a separate section?
Yes.
Wait.
No. It is not a separate section. It is not a separate section. Like what I'm trying to say is this. If I come back towards the audit report pattern, for example, you want to include here an emphasis of matter paragraph, right? You want to include here an emphasis of matter paragraph, and it is about subsequent event disclosure. So you will put a dash against it, and basically you are changing the name. Emphasis of matter dash subsequent events. So that the user must know that what actually is this emphasis of matter actually about. Like just by reading the heading, he will know what the auditor is talking about. Got it?
Okay, wait.
Got it? Any questions?
We have a question actually.
Yes.
So basically, when we did that class on subsequent event, right? You said materiality doesn't matter, but it actually matters. I think it matters.
I did not say that materiality does not matter. I said the materiality, well, your question is appropriate. It is correct. For F8 level, it is not correct. I told you that if it is a subsequent event and it has to be adjusted, do not look for materiality, always adjust it. This is what I told you, right?
Like, what do you mean by that? Because when I read the notes you gave, you were like, if it's material, then you must disclose it. No, I'm talking about subsequent event, like non-adjusting event.
Well, there I told you materiality matters, Omi. I never said that materiality does not matter.
I can't remember that.
I only said that materiality does not matter for adjustable events.
Okay.
Materiality only matters for non-adjustable events, because if they are material, they have to be disclosed. This is what I said even within the lecture.
Because in a lecture, it felt like I had, that's what you say, it doesn't matter. So this was confusing. But it's okay.
Understood?
Yeah.
Great. Now let's move forward. Let's come towards the next important thing, that is other matter paragraph. Let's come towards by board and let's try to understand what is this OM paragraph. Why is it included within the audit report?
The last one, meant
by this?
OM.
Can you imagine what is other matter paragraph about?
There's another. Wait, isn't there any other matter in the audit report?
Come again.
Isn't there another other matters?
No.
Well, go back, please. To the wait, 1 second. Other yeah, other information.
Can I move now?
What? Yeah, yeah.
Okay. Let's come towards other matter paragraph. What
Okay.
do you think would be included within other matter paragraph?
I don't even know because I feel like everything that should be there will be in other other stuff like the other one.
Yes. So basically, you are thinking right now, if any other disclosure which was properly disclosed and it is related to the financial statements, we have talked about it within EOM paragraph. When we talk about material uncertainty relating to going concern, we have already talked about it within the Purga paragraph. So all
So
the financial statements
all
are
of this need to be
basically
after
covered,
disclosure.
right?
Yeah.
So the question is, why is there something known as an other matter paragraph? Why is this included? Or what is meant by this? Very simple. Anything that the auditor believes the user should know, anything that the auditor believes that the user should know, and it is not related to financial statements, and it is not related to financial statements, is included within other matter paragraph.
Wait a minute. That.
So let me give you an example and I'll ask you a question.
Wait.
Previous year,
Sorry.
I
Let me add
was
that.
not the auditor of this company. And this year, I am the auditor of this company. I think that it is important for the users to know that previous year, I was not the auditor of this company. In which paragraph would I include this information?
Odd matter.
Yes, other matter.
So it's
Because it
anything
is
that's
not.
not directly related
Yes.
to anything not directly related to financial reporting.
Yes, correct. You are 100% correct.
Wait. Mm-hmm. Okay.
Okay, great. Let me ask you another question and answer this for me, please. The company is
Okay.
facing a
Okay.
lot of lawsuits from its customers, and they are properly disclosed within the financial statements. And again, a provision is also recorded against it. And the auditor thinks that this should be emphasized to the users. In which paragraph would he include
Um. Wait. Come again.
it? Basically, the
No.
company
How you said?
which we
You
are
said
auditing right now, the
disclosure
company
of
which we are auditing right now is facing a lot of lawsuits from its customers, and they have properly disclosed this matter, and they have properly recorded a provision against this. And the auditor now wants to
uh
emphasize this matter. In which paragraph should he emphasize it?
um EOM.
Yes, emphasis of matter paragraph. Now let me
Yeah.
rephrase it a bit. Let me rephrase it. Again, the same question. The company which we are auditing right now is facing a lot of lawsuits from its customers, and they should have properly disclosed it, which they have done. But they have recorded no provision against it, while they should have recorded a provision. And now the auditor wants to emphasize this matter to the users. In which paragraph should he include this now?
It can't be EOM, but then the thing
Great.
is,
Great. It
but the thing is,
cannot be included in any of the paragraphs
yeah.
because it is not properly recorded. The condition was it is properly
Wait.
disclosed, it must be related to the financial statements, and it should be properly recorded as well. Only then you can
But
emphasize that matter.
we have something to say.
Yes.
You said for the other matter paragraph, it's like anything that's not directly related to the financial reporting.
But this matter is directly linked to the financial reporting provision. It is
Yeah.
related to
So
the
okay.
financial
Yeah.
statement. You
That's
cannot
why I know
include
this.
it within other matter as well. Other
True.
matter is only for the things that is not included with any other portion of the audit report. That is a short way to remember it. A very short way to.
Okay.
So anything that is linked to the financial statements and the auditor wants to emphasize it, EOM paragraph. Material uncertainty relating to going concern properly disclosed, Murha paragraph. Report and other legal requirements, there is another paragraph for it. Any other information within the annual report of the company, there is another paragraph known as other information paragraph, which the auditor always
Oh
includes.
no. Oh no. Why is the legal requirement accorded? Oh no.
Oh me, oh me, oh me, oh
I
me. What
said
is this?
what?
What is this? We have studied this
Is it
within
on? Is
previous
it on the
lecture.
regulatory and the other one? What's it called?
Yes. All those types of things are included within this paragraph. So
No, because like when you say legal, I did not think it was gonna be lawsuit. I thought it was like, I don't know, financial standards and stuff.
no, Omi, things that are
Yeah.
not included within any other portion of the audit report, but the auditor wants to talk about it, then he uses the other matter paragraphs. Got it?
Yes.
Understood?
No, actually I thought like
Hmm.
legal is also includes lawsuits and stuff.
But okay, let me ask you a question, very important. When we
It's not
talk
a
about the
claim. Okay,
legal
I'm okay.
lawsuit, legal lawsuit, obviously it would not be included within this paragraph because this paragraph is for something where the auditor has to provide a report on something that was a requirement of the government. Yes?
Yes.
Yes. So obviously that would also not be included here. If there is a legal lawsuit ongoing and the company has properly disclosed it, it is properly recorded as well, then you will use an EOM paragraph because the condition is that it is related to the financial statements.
These
Okay?
questions are weird. Okay. Um, wait, I have
Yes.
something to say.
Yes.
A claim, like if a customer makes a claim, is it like a lawsuit or something? Because I don't know. Is that
It is a
what's
lawsuit.
that?
If the no, basically, if the customers are claiming something, yet you have not gone to the court, it is not a lawsuit. But again, if the customers are claiming something, remember this: if the customer is
Well,
claiming something, obviously I should, as a company, record a provision for it, or let's say refund liability for it, because the customer is trying to get a refund. So I have to record a liability against it. So this is the matter. Again,
uh,
this is again, if the company has not recorded it, this does not mean that it is not related to the financial statement. Still, it is related to the financial statements. You cannot include that with an OM paragraph, other matter paragraph.
okay.
Okay. Any questions now? Can I move forward?
Continue. Yeah, let's continue.
Great. So if I come down towards the notes again, here I have also talked about other matter paragraph. The same explanation is given here, and I have provided some examples as well. So please read these ones. These are really easy to understand. I want to move towards something that is 100% important for the exam. Remember one thing very important. The pattern we studied, the Murga paragraph, EOM paragraph, other matter
How does
paragraph that we have studied.
how are
Listen,
questions coming on this?
listen. Okay, we will go towards that, but first listen to this. The things that we have
Okay.
studied up till now, they are less important for long questions. One thing that I'm about to tell you is that if you understand what we are about to study right now properly, you will easily be able to get 5 marks with an exam. Because within the long questions, there are for 5 marks, the auditor asks a question which requires you to give an opinion whether the financial statements are correct or not correct. Okay.
Okay.
And this is something we are going to move towards right now. Can I move towards it?
Yes.
Okay. First, my question is, have you read every single thing that I asked you to read within the previous lecture? Because if you
I
did
tried.
not read it, okay, if you have read it, I know you have a lot of questions from that, but a lot of your questions will be answered just by understanding this. When I start explaining
Yeah,
this,
because I know it's important.
you will understand many different things. Got it? So focus 100% upon
Yes.
what you are about to study. Now,
Like, let me
have
take a
it in
2
your
minutes
mind,
break
first of
by
all.
this.
Yes, yes.
Let me take a 2 minutes break, please. Like 2 or 3 minutes.
Okay, sure. Take a break.
Okay.
All right, so before we move toward this part of the syllabus that is very important for the exams, I want you to write down what I'm about to tell you, first of all, and I also want you to understand it. But I will give you a time to write it, or even I can take a screenshot of it so that I can share it with you later on, if you don't want
Yeah,
it.
do that,
But
do
if
that.
you want to
Write
write
it
it,
neatly.
if you do want to write it, there is no need for a screenshot because I make a lot of spelling mistakes. So, and it is a bit rough. I understand. Okay, let's come towards this. Just like the audit report itself, I told you that there are two types of audit reports, right? The number one type is an unmodified audit report. An unmodified audit report. The number two type is a modified audit report. And you now have a brief understanding and a very detailed understanding as well, like what is meant by this. So if any of these three paragraphs are not included within the auditor's report, it is meant that it is an unmodified audit report. But if any of these paragraphs are included within the audit report, any one, any two, or all of the three, anyone is even touched within the audit report, then it is known as a modified audit report. Understood?
Unmodified, modified. Okay.
Okay.
Wait. Let me write it down. Wait. 1 second.
Yes.
Wait, can you repeat it?
Yes, I can repeat it. If none of the three paragraphs, EOM, OM, and Murga, none of these three are included within the auditor's report, it is known as an unmodified audit report. But if any of these paragraphs are included, it is known as a modified audit report.
Unmodified. If any of the three. Wow, that's not what I thought it would mean. I thought it would mean like the auditor modified his opinion.
Come again, come again. No, 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 no. We are
I
not
thought it
talking
was
about the
gonna be
opinion
like,
right
I don't
now.
know.
No, 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 no. We are not talking about the opinion right now. We are only talking about the audit report. Opinion is something else. There is a big backstory to it.
Fair enough, fair
Can I
enough.
come towards that now?
Okay, we can continue. Yeah.
Now let's come towards opinion. This means basically audit opinion. And
Yeah,
opinion, when I say that the opinion is unmodified, this means that the auditor is saying that the financial statements are 100% correct, or not 100% correct. Obviously, that would be an
Yeah, I'm
absolute
about to say
assurance.
something.
He is basically giving a reasonable assurance that the financial statements are correct. An unmodified opinion means that the financial statements are correct. But when I say that the opinion is modified, this means that the auditor is saying that there is some kind of a mistake within financial statements. That is all you need to understand for this. Don't ask me, sir, what is meant by there is some kind of mistake or all the financial statements are correct. Leave that portion. When modified, when we talk about modified, this means basically the auditor is telling the financial statements are not correct. Okay. Write it down as well.
Okay, yeah. I'm finished. Incorrect.
Now I want to determine
Okay,
some terminologies. In front of you, I'm going to write
correct.
down some terminologies and I'm going to ask you a question.
Hmm.
If I say that the auditor included Murga paragraph within his audit report. And when giving his opinion, the auditor said that the financial statements are correct. What terminology would be used, by the way? Like, how would you state it in professional words?
I asked if it's modified or unmodified.
Yes.
Wait,
How would you state it?
unmodified.
In
It's
professional
unmodified.
words, how will you state it?
Oh, give me 1 second. Don't say anything. Um, the the financial statement give a true and fair view.
No, 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 no. That is not what I'm asking about.
What are you asking
If I
about? I'm
want
not
to
asking about.
ask you, if I want to ask you whether the audit report was modified or unmodified, what are you going to tell me?
It's unmodified.
No,
No,
it's
it's
modified
modified.
because Morga paragraph has been included.
Yep, yep, yep.
It's a
Modified.
modified audit report. And if I talk about the opinion, is it modified or not modified? Unmodified, right?
Wait, it can be a modified and analysis confusing.
Yes, that is the piece of puzzle, the final piece of puzzle within the auditor's report, within the audit field.
What the heck? I thought it could just be modified,
So
modified.
listen. If I correctly try to explain it to someone right now who is also an auditor, what would I tell him? In this company's audit, I gave a modified audit report, but gave an unmodified audit opinion. Understood?
Wait, really? Okay.
Yes. Yes. I'm not telling you right now, like, what is the opinion. Basically, the auditor is saying that the financial statements are correct. Okay. So now, how is he going to phrase it? He will say, my audit report was modified, but my audit opinion was unmodified. And any auditor will simply know that the auditor included one of the three paragraphs in his audit report, but he said that the financial statements are correct. Okay.
Okay.
Now let's come towards situation number two.
Yes.
The same situation. And if I say I added none of the three paragraphs within my audit report, this means my audit report is now unmodified. Yes, it's an
True.
unmodified audit report. I have included none of the three paragraphs. Can you
Yeah,
hear
yeah,
me?
and I got that part.
Yes.
Yes, yes, I'm writing it
But
down.
I gave an opinion that the financial statements are not correct. So this means my audit opinion was modified. Opinion was modified. How would I phrase it now? I would say that as the auditor of this company, I gave an unmodified audit report with a modified audit opinion. Understood?
Yes.
Okay, let's come towards situation number 4. And by the way, you should be able to develop it yourself now. Like, it is very easy to understand. If I say
Echo.
that I did not included any of the 3 paragraphs within my audit report, this means my audit report was unmodified again. And at the same time, I said that the financial statements are correct. This means my audit opinion was also unmodified. So how would I phrase it now? I would say that my audit report was unmodified with an unmodified opinion as well. Understood?
Yep.
And there can also be a situation where both can be modified. I added any of the paragraphs which made the audit report modified, and I also said that the financial statements are incorrect. So now I will phrase it that I gave an audit report which was modified and an audit opinion which was also modified. Okay.
Okay.
This means modified audit opinion, modified audit report with modified audit opinion. Are these phrases understandable right now? Do you have any questions within these?
For now, it is, yeah.
Okay, have you written them down?
Yes.
Great. Let's move towards the next very, 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 very important thing, opinion. This is a very important thing. If I say that I'm about to modify my opinion, Omi, you have to remember this, that you can't just say that the financial statements are incorrect, because the fact is that what if there are unmaterial mistakes within the financial statements? They are very small mistakes. What do you do then? Because we talked about materiality always. What if there is a mistake, but it is only like in 1 or 2 places within the financial statements? It is only in 1 or 2 places within the financial statements. The mistake is only within 1 or 2 places. All the rest of the financial statements are correct. Let's say PPE was incorrectly recorded because depreciation was undercharged. This means that there are 2 mistakes within the financial statement. One in statement of financial position, that the PPE is incorrected, PPE is incorrectly recorded, and the other mistake is within the statement of profit and loss, where the depreciation expense is incorrectly recorded. All the rest of the financial statements are correct. So in this case, you can't just get up and say that the financial statements are incorrect. You can't just
So,
state
like, you're
that
saying,
all the financial statements are incorrect.
so what you're trying to say is, if like it's maybe a little,
No, 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 no.
kind of
Leave
like a
that
little
portion. Leave
mistake.
that portion for now, because I'm about to move towards it. Just understand
Wait,
this
wait. So now,
concept.
what are you trying to say? I
Okay,
don't
okay,
get. No, I don't
okay.
get.
I'm going to listen to it.
No, I said I don't get the concept you're trying to explain.
Okay, the concept that I'm trying to give you right now is this concept, and you have to learn it by heart. In order to develop an audit opinion, you have to learn it by heart. First, ignore this. Ignore these ones. Let's come towards these. Let's come towards these. The first thing that you're always going to do is that, are there mistakes within the financial statements? This is the first step. You come towards this. If there is a mistake within financial statements and it is material but not pervasive. Now, what is meant by pervasive here, Omi? If the mistake is only in
Aggressive.
2 places, not more than that, not more than 2 places. Pervasive means not more than 2 places. It is not impacting a lot of areas within financial statements, but the mistake is material. Do you understand the concept?
Wait, wait. It's material, not wait. Pervasive is only affects like 2 places,
Yes. As an
not more than
example,
two
I'm telling
places.
you, yes, only affects 2 places. For F8, remember, it only affects 2 places, not more than that. This means that learn the professional words, do not learn like mistakes is less than 2 words, 2 places. Don't learn that. Learn that the mistake is material, but it is not pervasive. It is not a pervasive mistake. Okay. Then the
Okay.
auditor will give a qualified audit opinion.
Oh.
When the auditor gives a qualified audit opinion within his audit report, automatically the user knows that the auditor is giving a qualified audit opinion. This means that there is a mistake within financial statements, but the mistake is only up to a maximum of 2 places, not more than that. The rest of the financial statements are correct. But your question might be, sir, how will the user know that where the mistake is?
No,
Obviously,
no,
you tell them,
no, no. What I was gonna
ignore
say
it
is,
right now. Ignore it. Ignore it. We will
okay.
study about that. Ignore it for now. Okay?
Actually, what I was gonna say is,
Hmm.
those auditors say my opinion is qualified. That's what the auditor says.
we will move towards that. Obviously, there are some changes to the paragraphs that you need to learn as well. I'll let you know about those. But for now, ignore those. We are just understanding the opinion itself. Understand this point first of all. If there is a material misstatement, this is the first category, and it is material but not pervasive, then the auditor gives a qualified audit opinion.
Qualified.
Okay.
Qualified.
Let's come towards the second criteria. If there is again a mistake within the financial statement, something is not correctly recorded, something should have been recorded some other way, the company has recorded some other way. So this means that there is a mistake within financial statement again, and this time it is material and pervasive. This means that the mistake is in more than two places, or in other words, the mistake affects a lot of areas of the financial statements. Now you as an auditor will give an adverse opinion. Okay.
Wait 1 second. Material and pervasive. Material and pervasive. So you say you're telling the user there are mistakes with there are material mistakes and it's more than the two places. That's what material and pervasive means.
Yes. Any questions? Can I move forward now?
Yeah.
Okay. Now let's move towards the second category. The second category of issue where the auditor might be required to modify his opinion. By the way, even if you go a qualified opinion or an adverse opinion, both mean the same thing, that the opinion is modified. Because the opinion is not, if the opinion is not modified, this means that all the financial statements are correct. In both cases, either if it is a qualified opinion or an adverse opinion, this means that the opinion is modified. Right?
Wait, I don't know what you just say. You're going too fast.
Come again?
I don't know what you're trying to say. You're going too fast.
Okay, listen. If I say the auditor has given a qualified opinion, what does this mean? Is the opinion modified or unmodified?
Modified.
Yes, obviously, because when we say that the opinion is unmodified, this means the auditor has given a clean check. There is no mistake within financial statement. So if there is one or two mistakes, this means the opinion is modified. That is why the auditor is giving a qualified opinion. If there is pervasive mistake and material mistake, then the auditor would give an adverse opinion. So, again, it is known as a modified opinion. So here we are only studying about modified opinions.
So you're saying a modified opinion has different types, so qualified, advanced.
Yes. Correct. Now let's come towards the second area where you will need to modify your audit opinion. As an auditor, Omi, listen very carefully. As an auditor in the future as well, you will go to audit many different companies. And many different times you will face a situation where you are not able to obtain sufficient and appropriate audit evidence. Either the management is not giving you the sample you selected as invoices, so you were not able to get the evidence. Either the management is not properly giving you time and information you need to audit the revenue side. So you were again not able to get sufficient and appropriate audit evidence. You get the idea, right? As an auditor, you have to get sufficient and appropriate audit evidence. If in any case, you were not able to get sufficient and appropriate audit evidence, and the evidence you were not able to gain against balances that were material, but again not pervasive. So let's say revenue recorded by the company is $100 and the total materiality amount is $5. It is above materiality, right? So this revenue amount is material, correct or wrong?
Yes.
It is, like, you are understanding it correctly. It is material, but it is only impacting one place within the financial statements. This means that you were not able to get, when we talk about pervasiveness again within this category, this means you were not able to get evidence at a maximum of two places within the financial statements. You were able to get evidence in all of the rest places. So if you were not able to get sufficient and appropriate audit evidence regarding an amount that was material, but it is not pervasive, again, you give a qualified opinion. Okay.
So even though it's material, you are not able to get enough evidence on it. So then you give a qualified opinion.
But it should not be pervasive.
Yeah, not pervasive. So it doesn't affect more than two places. Okay.
Now let's come towards the other part. for which you have been repeatedly asking me questions for the last 1 or 1.5 weeks, and I've been trying to tell you, delay it, ignore it for now. When you are not able to get audit opinion for something that is material, and it turns out to be pervasive as well. This means you were not able to get evidence for revenue, for cost of sales, for something, let's suppose, as administration expense, or for PPE as well. So a lot of different places you were not able to get audit evidence, more than two basically. Now it is pervasive as well. Then you give a disclaimer of opinion. And what is meant by disclaimer of opinion? Disclaimer of opinion means that as an auditor of this company, I'm not giving any opinion. I'm not saying that the financial statements are correct. I'm not even saying that the financial statements are incorrect. I am giving a disclaimer of opinion because I have been not able to gather enough sufficient and appropriate audit evidence to develop an opinion or to give you an opinion. Are the financial statements correct or incorrect? I have not been able to get audit evidence. This is why I am disclaiming my opinion. I am giving a disclaimer of opinion, which simply means that the auditor has not given any opinion for these financial statements. Understood?
Yes. Yeah.
Now ask me the question.
Oh wow. Wait. Can an auditor repeat an audit?
Come again?
Can an auditor be asked to repeat an audit?
Could an auditor actually repeat an audit?
Yeah, be asked to
No,
repeat
no, no,
it.
no, 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 no.
Like let's say you said like you were not able to gain sufficient appropriate
No, you
evidence and
can't
stuff like that.
because there is a
So
limited time
management
for it.
comes to you and tell you to
Okay, listen. If obviously when you're about to give an audit opinion, you have to make an audit report. I told you this one very important thing, that once the financial statements are finalized, you have completed the audit, you tell the management that this is what we are going to give as an audit opinion. We are going to give a disclaimer of opinion. So the management again is going to sit down with you and ask you questions like, why are you giving a disclaimer of opinion? First of all, remember, this audit report is not yet given out to the public. And you will explain to them, we were not able to get evidence here, there. So now the management will be confused. Like as a company, obviously, if you are getting a disclaimer of opinion, it is a very, very bad reputation for your company. It is a very, very, very bad reputation for your company, by the way. So you will now get really, really, you can say, you will think fast and you will give every single thing that is required by the auditor. In 99% of the cases, this is what actually happens, that the management then gives you all the information you need, every single thing that you need. And you just completely complete all the audit, check again all the things that you were not able to get evidence for. This is how it goes. But in those 1% of the cases, if the management is still stubborn, then you give a disclaimer of opinion. Simple. So this is not examinable. This is just conceptual. You should know it. This is just important for your mind itself, like how everything goes on.
Okay.
Now, any other questions?
No.
Okay. Now, more important things right now, which you should know. Okay. Now you have understood all of these categories of different types of opinions that the auditor can give. And you have to learn these, by the way. Please learn these cases by heart from the notes. It is easier from the notes. From the theory, it would have been very difficult for you to understand. From the notes, because of this graph that I have made, because of this picture flow chart that I have made, it is really easy to understand. So use the notes to understand this. Okay. And learn this, like how every single opinion is given. A very important point is this. Whenever the auditor is giving a qualified opinion, there are some changes made to the financial statement. Sorry, there are some changes made to the audit report. First of all, you remember in the auditor report, this first paragraph was regarding what? It was regarding the auditor's opinion, right?
Yeah.
Yes. So when you are giving a qualified opinion, the name of this paragraph will change to qualified opinion. Instead of writing now the name auditor's opinion, the name would be qualified opinion.
Wait. In the normal audit report.
Yes.
Wait. Come again.
Now you
I
will
don't
ask the
get it.
question, sir, isn't the audit
So
report being
why?
modified now?
Yeah, exactly.
No, it is not. It is not.
It is though.
No, it is not. Because The audit report can only be
Okay.
modified by these three paragraphs, please. Remember that. Nothing else.
What?
The audit report can only be modified by the three paragraphs.
Oh, yeah, yeah. Okay. Oh,
Orga,
wait, what you're
EOM,
saying is
OM.
a modified opinion would not modify an audit report.
So this is just the name of the paragraph being changed. So the
Wait, one
users
second. Let me just
know
write this down.
directly by looking at the name of the paragraph that what sort of opinion have you given. So the users directly know this. Okay. So the name
Wait,
of
one
the
second.
paragraph of auditor's opinion will change to qualified opinion.
Okay.
And guess what? Another name is going to change. The basis for opinion paragraph name would also change to basis for qualified opinion.
And basis. Wait, which one?
The next
What is
paragraph.
it? Basis opinion. Okay.
Now let's read from the notes. If the misstatement or lack of sufficient appropriate evidence is material but not pervasive, again, a qualified opinion will be issued in both of these cases. Either you were not able to get sufficient and appropriate evidence, it was material but not pervasive, you will give a qualified opinion. Or if there was a mistake in the financial statements, it was material but not pervasive, you will, in both of the cases, you give the same opinion, which is known as qualified opinion, right?
Yep.
Yes, this means the matter is material to the area of financial statements affected, but does not affect the remainder of the financial statements. As a general rule of thumb, for double A, I've told you two areas. If more than two areas are being impacted, this means that the matter is pervasive. If less than or equal to two areas, the matter is not pervasive. Although significant to the user's decision making, a material matter can be isolated while the remainder of the financial statements may be relied upon. Exactly as I told you, that if the
Wait,
error is in one or two places, as an auditor, you cannot say that all the financial statements are incorrect because the users might be able to rely upon the rest of the financial statements. The error is in just
one
these
second.
two places, right?
Which qualified opinion are you talking about?
Both the qualified opinions mean the same thing. This is for both the qualified opinions.
No, they don't even mean the same thing.
They do mean the same thing. Like, let me give you an example. If you're not able to obtain evidence for one or two things, again, you would give a qualified opinion. Now, what are you going to say to the users? Again, you will say that the rest of the financial statements can be relied upon because for the rest of the financial statements, we were able to obtain sufficient and appropriate audit evidence.
But then the other
Yeah, now
portion
you
is
have the question, what if there is an error in one or two places and we were not able to get evidence in remaining of one or two places? What opinion will we give then? You
yeah,
might
that's
have this
qualified
question within your
opinion.
mind.
No, no,
Yes,
what I'm saying is
yes.
the first qualified opinion is we know that it's material misstated. We have
Mm-hmm.
obtained evidence, we know it.
Mm-hmm.
But for two places, um there's of it that two places are misstated. But the
Mm-hmm.
second one is we are actually not able to gain evidence on these two places. We don't even
Mm-hmm.
know if they're actually
Mm-hmm.
misstated or something. So
Mm-hmm.
that's the thing. So it means they
Okay.
are different qualified
Yeah, they
opinions.
are different,
So what
but
is
they
the
both
same?
mean the same thing. That you are trying to tell to the users, don't rely on these two places. The remaining financial statements can be relied upon. In both the cases, this is what you are trying to say, right? Like, don't rely
Wait.
upon PPE and depreciation. Even if, let's say, in case number one, PPE was materially misstated and depreciation was also materially misstated. You gave a qualified opinion. Basically, now you're trying to tell to the users that don't rely on these two places. Remaining financial statements can be relied upon. Let's come to case number two. You were not able to obtain sufficient and appropriate evidence. Again, PPE and depreciation. Now, what are you going to tell to the users? Again, the same thing, that we were not able to get sufficient and appropriate audit evidence just in these two places. The remainder of the financial statements can be relied upon. That's it. Both qualified opinion mean the same thing.
Technically, okay.
Okay. Got it?
Wait. if the misstatement or lack of sufficient is material but not okay. This means
Yes.
the material is if applicable but does not affect the remainder. Okay, I was looking at this decision material.
Okay. Now, an important thing that you should know for the double A
Oh, okay.
exam, for the double A
Mm-hmm.
exam, the examiner never asks you a question in which there is also a misstatement and also you were not able to get sufficient and appropriate audit evidence. He will just ask a question either from one of these two, just one of these two. Both cannot be combined in a single question. Got it? And they will not be combined.
Yeah.
It is not within the double A course. So don't worry about it. Okay.
Yes.
Now, a very important thing that you must remember for your exam as well is this. The opinion will state, except for this matter, the financial statements give a true and fair view. What is meant by this line? The auditor's opinion paragraph, the first paragraph, the auditor's opinion paragraph, the name of it was changed to qualified opinion, right?
Mm-hmm.
For this specific paragraph, whatever is written, it does not matter. But remember this one line, and you will also have to give this one line within your exam as well. That now write it down. In the qualified opinion paragraph, the auditor will state that except for this matter, the remainder of the financial statements can be relied upon, or the
Wait,
remainder of the financial statements give a true and fair view. You need to remember this
wait,
line
wait,
for
wait,
the
wait.
exam.
Wait, in qualified opinion, the auditor will state.
Within qualified opinion paragraph,
Mm-hmm.
that except for this matter, the remainder of the financial statements give a true and fair view. Write this down. Got it? And you have to learn it, by the way, as well. You have to
Wait.
learn it.
That's something to see.
Yes.
What is the auditors like include everything that they do? Like where is that?
Come again, come
Like
again.
I don't know. I feel like one time when I asked the auditors, like everything they did, all the misstatements they found during the audit, anything that they had, where will they report that to the users?
No, 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 no. They don't need to they don't need to report every single misstatement to the users, only material. You should know this, only material. But because now you are looking at the audit report itself, did we discuss anything about where do you include the list of all the misstatements? No, you don't. You never tell
Yeah,
those to
that's
the
what I thought.
users. You never tell those to the users.
Oh,
Okay.
okay.
Now let's move towards adverse opinion. You have written regarding qualified opinion, right?
Okay.
Okay, now let's move towards adverse opinion. In adverse opinion, you don't need to remember anything that will be written within paragraph. You don't need to remember that. You just need to remember two very important things. Again, the auditor's opinion paragraph will be changed to adverse opinion. It will change to adverse opinion.
Wait.
Okay.
Hmm?
And the second, basis of opinion paragraph. Its name will also change to basis for adverse opinion.
Wait. Um. So it's not working. Wait. So adverse opinion paragraph is going to adverse opinion,
Hmm.
and then the basis of adverse opinion.
Yes, that's it. And within this final line, also remember this. Basically, now in adverse opinion paragraph, that was auditor's opinion paragraph, what will you write down? You will simply state that the financial statements do not give a true and fair view. That's it. Any questions
If you're
regarding
like not
adverse
auditing,
opinion?
no,
Yes,
no,
yes,
I
yes.
don't
Come
have a
again.
question, but it's just a normal question.
Is
If
this a
you're like
normal?
not,
Yes. Okay. Ask.
yeah,
Sorry, sorry,
like
sorry.
it's on auditing though, but it's like if you're not auditing financial statements, right?
Mhm.
Like, what do you do for work? Like, what do you do like if you go to work?
What did we study in all of the audit? We are almost done with the audit. We do substantive procedures, we do risk assessment, we check out the
No, no, no.
SO.
What I mean is, no, no. What I'm saying is, like, let's say, obviously, you're not going to be auditing every single. Like once you finish one company's audit, you go to another, you go to another. So I
Yeah.
mean, like during those in between and stuff, what do you do then?
Oh,
Like,
oh, you're asking for like in between. Obviously, Omi. Like for example, let's talk about UK. All of the companies within UK, either their year end is 30th of June or either their year end is 31st of December. So at 31st of December, the auditors become really busy. And towards the end of March, they are completely free because they have audited all the companies whose year ends were ending upon 31st of December. So March, April, May. Now comes June. For these 3 months, you are basically free. You are going to office or even you don't want to go to the office. It is known as off season, non-busy season. So you can even be working from home a lot of the times and you can be doing nothing and completely free. By the way, my time in KPMG, Ramzan, we are Muslims. We do keep Ramzan. I have never
yeah,
went in Ramzan to office. Never. And I've never even opened my laptop for straight 30 or 40 days when it was Ramzan. Why?
and you
Because
still
it
get
was
paid
during
normal,
non-busy
or
season.
do you still get paid, or
Come again?
do you still get paid, or you don't?
Yes, do you get paid for it, and it is acceptable. It is also not like haram. Why? Because it is acceptable all around the you can say the industry. Because during the on season or during the busy season, you are working really long hours, even at 12, 1 or 2 at midnight. And then you come back home, and then at 9 in the early morning, you get up back again and go to office. So for all the extra time that you
Oh,
paid there, you basically take off during the non-busy season. And it is paid.
oh,
Okay.
okay, yeah.
Let's come towards the next thing. Let's come towards the next thing. We can't waste our time right now. We are studying really important things for the exam because short, you will get a question. Let's come to
So,
disclaimer of opinion. Disclaimer of opinion. Whenever an auditor is giving a disclaimer of opinion, remember these lines. Again, the auditor's opinion paragraph the name of it will change to disclaimer of opinion. And the basis of opinion paragraph's name will change to basis for disclaimer of opinion.
wait. Disclaimer opinion. Wait. Um, disclaimer opinion will be on the normal audit report.
Yes.
Okay, I have something to say.
Yes.
Can all of this be on the modified audit report? Let's say
Yes.
that it's
Yes.
included.
Yes. Yes. Because we just studied the auditor can give a modified audit report and a modified audit opinion at the same time. But again, the paragraph's name and wording will be changed. For qualified opinion, again, you will write down, except for this matter, the rest of the financial statements give a true and fair view. For adverse opinion, you will write down with an adverse opinion paragraph that the financial statements do not give a true and fair view. For disclaimer of opinion, again, you will change the names of the paragraph, both the paragraphs.
Then this disclaimer opinion is very bad for the auditor to give.
Even, adverse opinion, people say that adverse opinion is really bad when a company gets it. Yes, it is bad. I don't say that it is not bad. It is really bad for a company. But it is not as bad as a disclaimer of opinion because when we talk about when we talk about adverse opinion, this means that the company gave all the information that was required by the auditor. The auditor was able to get all the sufficient and appropriate audit evidence to make his own opinion. This means
Mhm.
that the management is a very honest management. They gave everything to the auditor. They were just not accepting something. Auditor were asking them, please correct this and correct this. They were just not accepting this. It might be the case that the management said that auditor might be wrong in accounting treatments. So whatever the case was, the management is a good management. But when an auditor gives a disclaimer of opinion, that's it for the company. That's the final point for the company. You will see in your own life as well. Whenever a company has received a disclaimer of opinion, the share price has fallen dramatically down to cents, from dollars to cents. Because
Uh,
if
that
the
happens
auditor is
within
not
larger
able to get
companies.
the auditor was not able to get sufficient and appropriate evidence, this means that even the shareholders cannot rely upon the company now. Okay,
Okay.
this is the problem. Now,
Have you ever had to give that for a company?
come again.
Did you ever give an disclaimer opinion?
No, I didn't.
Uh,
We have given a qualified opinion. never an adverse opinion, because even the company don't wants to get an adverse opinion. When you tell the company your opinion will now be adverse opinion, they just jump and they become really scared
The
and they give
difference
you all the
between
information.
adverse, we can say something. The difference between adverse and disclaimer is in adverse, more than two places are incorrect.
Yes, they are incorrect. You are right.
But then for the disclaimer is it's like you don't make any opinion.
Yes, because you were not able to obtain sufficient and appropriate evidence
Wait,
in
can you
more
go
than
back
two
on the graph,
places.
please?
Yes, sure, I can go back.
Wait. Oh, okay, okay. Oh, okay. Adverse and disclaimer. Okay, no problem.
Hmm. Understood?
Yeah.
Great. Now let's come towards this and read the final thing that is important for you within disclosure, within disclaimer of opinion. Okay. This is very important and you need to learn this as well. I'll explain it and don't write it down because it is written within the notes. Learn it from here, but learn it. The statement that sufficient and appropriate evidence to provide basis for the auditor's opinion has been obtained is not included. So basically, remember this. Within the opinion paragraph, the auditor's opinion paragraph, there is a statement which states that basically the auditors write down within this paragraph that we were able to obtain sufficient and appropriate evidence regarding all the things, and we are giving a qualified or an adverse opinion. But when you are giving a disclaimer of opinion, you do not include this statement. You do not write down the statement. Okay.
Huh?
Should
Wait,
I?
I don't get it.
Okay. Let me explain again. Within the auditor's opinion paragraph, within the auditor's opinion paragraph,
Wait.
there is a
This is
line
like
within.
general.
This is general, yes.
This is
And no,
general.
no, this is not general. This is for disclaimer of opinion.
Okay, wait.
It is
Okay.
written within the note, so you don't need to write it down. So the first thing
I
you
just
need to
understand
remember
this.
is that obviously you will change the names of the paragraph, but there are certain additional things that you have to change as well. Within the
Okay.
auditor's opinion paragraph, there is a line where the auditor states always in every single auditor's report, the auditor writes down this line within the auditor's opinion paragraph that we were able to get sufficient and appropriate audit evidence. This is a line that they always write down. But when they are giving a disclaimer of opinion, this line is not included anymore. Okay.
Wait. Okay.
That's the number one thing that you need to remember. For example,
Disclaimer is not included. Okay.
within disclaimer of opinion, the statement that sufficient and appropriate evidence to provide a basis for audit opinion has been obtained is not included anymore. Okay.
Mm-hmm.
The number two thing that you must remember, the statement that the financial statements have been audited is changed to we were engaged to audit the financial statement.
What the heck?
Yes.
That's so.
So in every single auditor's report, again, within the auditor's opinion paragraph, the auditor's opening line is, we were designed or we were employed or deployed to audit XYZ company's financial statements. Now this statement will change to and it will state, we were engaged to audit the financial statements. And this is done within disclaimer of opinion. Remember
Wait.
this,
For the other,
please.
no, sorry. For the other one, for
Yes.
the normal financial statements, what does it say? Like, if it's not
For the
disclaimer
normal
opinion.
financial statements, for qualified opinion, for paragraph, for adverse opinion, it is the same thing. This is the line that is generically included. Financial statements have been audited. This is what the auditor state. But in disclaimer of opinion, the auditor says we were engaged to audit the financial statements.
Oh,
Okay.
wait.
So for all the other types of opinion, the rest of the things are same. But for disclaimer, everything changes.
We were engaged now. Has been audited.
Okay. Let's come towards point number 3. The statement regarding the audit being conducted in accordance with ISAs and independence and other ethical responsibilities, basically, in every other opinion, whether they are giving an unmodified opinion or a qualified opinion or an adverse opinion, they always state within the auditor's opinion that the audit was conducted in accordance with international standards of auditing and we were independent and we checked all our ethical responsibilities as well. In every other opinion, they say that. But in the case of disclaimer of opinion, are positioned within the auditor responsibilities section rather than the basis for disclaimer of opinion section.
Huh?
So in every other
Well, I don't get it.
every other opinion, whether it is unmodified, qualified, or adverse. This line
Mhm.
that we conducted audit in accordance with ISAs, we checked our ethical responsibilities, we checked whether we were independent or not. This is basically included in basis of opinion paragraph. Okay. This is included there.
Oh yeah,
But
that's
when
in
you are
basis of
giving,
opinion.
yes, ask the question.
No, let's continue. I just
Okay,
want to
but
ask.
when you are giving a disclaimer of opinion, these lines will not be included in basis for adverse, basis for basically opinion paragraph, basis for opinion paragraph. And by the way, what would be the name of basis for opinion paragraph? It would be basis for disclaimer of opinion paragraph, right? Because the names of the paragraph always change with whatever opinion you are giving. This line will not be included there anymore. This line will be included within auditor responsibilities paragraph. And there is basically this paragraph within the audit report as well. You see this paragraph. Now this line would be included in auditor responsibility paragraph. Okay.
Mm.
Understood?
Okay. Okay.
Let's move towards the last thing that you need to remember as well. Last thing, the key audit matter section is not included in the report, as to do so would suggest the financial statements are more credible in relation to those matters which would be inconsistent with the disclosure of opinion on the financial statement as a whole. So basically, if you are giving a disclaimer of opinion, whether it is a listed or a non-listed company, the CAM paragraph is not included anymore within the audited.
Wait, let me read this. If it's disclaimer opinion, CAM is key audit matter is not included.
Yes, they are
So many
ignored.
stuff. Why?
Because that is a very good question, that why it is excluded. Because Omi, answer this question to me. If I'm including CAM, I'm writing down revenue was very difficult to audit for me because of this reason. And then I'm further stating in the next column what were the procedures I performed against revenue. This is what I'm doing, right?
Mm-hmm.
So basically, wouldn't you as a user think, okay, the auditor, even though he's giving a disclaimer of opinion, he has done these procedures. So this means revenue can be reliable. You might think that at the back of your head. Plus, my question is, why would you include CAM paragraphs stating that these are the procedures we did when you gave no opinion? When you are giving no opinion, when you are giving a disclaimer of opinion, disclaiming your opinion, why are you saying these are the procedures we did? Why are you in the first place including the CAM paragraph? There is no need for it. Because either in any case, you are giving a disclaimer of opinion. The CAM paragraph, within the CAM paragraph, you would state these are the difficulties we found. This is the something because of which it is included within CAM. These are the procedures we did. It is of no use anymore because you are disclaiming your opinion. So whatever work you did, it does not matter anymore. You are just disclaiming your opinion. Okay.
Okay.
Any questions in these 4 points?
No.
So listen to me, and right now do not ask a question. Listen to me very carefully. The things we have done today, Murga paragraph, EOM, OM, learn those and understand why they are included. Every single one of those. The number two thing, learn this specific graph, learn this specific flow chart that I've given here. You should be able to develop your own opinion from now onwards anywhere within the question. The next thing, you should know this, that whenever the name of the opinion changes, the paragraph name, the auditor's opinion paragraph, the basis for opinion paragraph, their name change as well. For qualified opinion, you have to remember that within the qualified opinion paragraph, you have to write down the fact that except for this matter, the financial statements give a true and fair view. Whenever you are giving a qualified opinion. For adverse opinion, you write down the financial statements do not provide a true and fair view. For disclaimer of opinion, the paragraph names are changed as well. But these four are additional very important things that are also done in case of disclaimer of opinion. You must learn this. You must learn this. I'm again repeating, you must learn all of this. And that's it.